Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Plenty to talk about this week, and specifically the quarterly hogs and pigs report, and we'll get into those details in a little bit. But let's get things started and take a look at what happened on the markets this week.
Yeah, if we start on the hog side of the equation, we look at barrels and gilts this week. They were down about $1.50. Well, that current lean hog futures contract was actually up $2.75 this week. Looking at the pork cutout value, it was also up a little more than 2 cents this week. We got a strength across a lot of the cuts, everything but ribs this week, and bellies were up 8 cents. So a lot of strength on the belly side when we look at what happened in hog markets this week. Switching to the cattle side of the equation, live cattle prices were down over $3 this week, so some weakness on that side of the equation. If we look at feeder cattle prices, they were steady to $3 higher this week. That might have had a little bit to do with some lower corn prices, as we saw corn futures down a little over a nickel this week on the current contract. Live cattle futures were up 65 cents, while the feeder cattle futures current contract was also up a little more than $2 this week. That choice box beef price was down $3.41 relative to a week ago. Ribs really were down hard this week, down 20 cents a pound. We also saw loins and briskets down this week as well.
Ribs took a beating on both the pork and the hog side of, or the beef side of things. Are we surprised, especially with the time of year that it is?
Yeah, a little bit. We'd expect, we're in the middle of summer grilling season, and maybe demand a little stronger for ribs than we've seen for a while. But it was a tough week on both sides on terms of rib prices.
On the beef side of things, too, I want to talk a little bit. There's been some pressure on the outside markets. Are we surprised to see the strength that we've seen at the end of the week here on beef futures, especially after we take a look at last week's cattle on feed report?
Yeah, absolutely. We started the week with a lot of weakness and really got a lot of strength here very late in the week in terms of futures prices, and really not any news that would have suggested the kind of run-up that we saw in futures prices here late in the week. And in fact, we just continue to see a lot of things that suggest more supplies of beef as we look ahead.
All right, let's get into that hogs and pigs report from yesterday, and really kind of surprising. And the way, if you read analysis and take a look at that report, it sounds like pork producers are headed for a long-term period of rough waters.
Yeah, I guess as we look at what we got yesterday out of that quarterly hogs and pigs report, number one, I don't think any of us were surprised that we got more hogs out of the report. However, the quantity of the increase might have caught many of us off guard a little bit. If I look at the breeding herd inventory, one number that jumps out at me, 110,000 head increase over the previous quarter in sow inventory. That's the largest increase in a quarter since June 1997. To put a little perspective to that, we saw increases in states like Illinois, Iowa, Oklahoma, Minnesota, Nebraska, North Carolina, Pennsylvania, Kansas, Missouri, and South Dakota. So a lot of states with increases in sow inventory. Again, not surprising they're up, just the magnitude of that increase. So overall, kept for breeding was up 3.5%. That falls outside the upper end of the range of pre-report estimates that was at 102.1. The average pre-report estimate was actually in at 101.7. So just a lot of sows that I worry about. Not only do we see more sows, but revisions that USDA provided us in this report were important as well. That fourth quarter 2017 pig crop got revised up by 225,000 head. Out of this report, we'll have to keep paying attention if USDA continues that strategy of upward revisions to pig crop as we move ahead as well. I guess right now, as I look at the report, one thing that sticks out to me, farrowing intentions, both June through August and Sep through Nov, up 101.6. I'll be surprised if we aren't up a lot more than that when it's all said and done in terms of sows farrowed, given that increasing breeding inventory. So all in all, we don't have a lot of good news out of that report from yesterday.
I want to ask a couple of questions. One, and we know what happened in the late 1990s with the hog herd and hog prices. How important is it as we see these types of increases? Does that shackle space and that ability to move hogs play in keeping prices at any level close to profitability?
Well, so it's critical, as you know, and this gets tough, so the day we don't have one extra shackle space is the day we get in trouble in this industry. And that's a difficult call to make in terms of, just how negative is this as we look ahead. However, thank goodness we're adding processing capacity and have been. I remind myself all the time that, much of that processing capacity that we've been adding has at least some producer ownership to it. So in many ways, I think we're supplying more pigs to fill that capacity that's coming. So maybe relative to where we were when we had the very tough times in the late 1990s, a little bit more coordination between that producer side of the equation and what's been happening in terms of processing capacity.
I think the other elephant in the room, Scott, has to be this tariff and trade game. What happens? And I know we don't like to play in a game of what ifs, but it's got to be in the industries, in the back of the industry's mind, that what happens if we don't get this sorted out, and that deadline is pretty close.
Yeah, just so I always say, don't forget, when we keep adding more on the supply side than we anticipated was coming, the worse the effects that a tariff game has to us. And so that's what bothers me. We're already now having more supplies than we even thought we might have, yet demand, at least internationally, might become more uncertain as we deal with all these tariff situations that are unfolding on the pork side.
Let's get into the acreage report, because I want to talk a little risk management when it comes to pork production, especially as we're talking about these numbers. But that acreage report kind of plays into that as well.
Yeah, we did get an acreage report out, and I guess for the most part, from a livestock perspective, acreage came in pretty close on corn and soybeans relative to what we expected. On the corn side, we got 89.1 million acres of corn being planted out of this report. Pre-report average was 88.6, so a little higher than pre-report estimate. On the soybean side, coming in at 89.6 was very near that 89.7 average pre-report estimate as well. So if we have decent weather, we might put another fairly large crops of corn and soybeans in the bin. Hay for me stood out as well this time. USDA said we have 55.1 million acres of hay now planted. That's up from 53.8 million acres last year. So some growth. And I know, yes, we don't have as many hay supplies because of what are some tougher yield conditions. We certainly have increased hay acres.
Let's talk a little bit about managing risk and with some of that downside potential, and how important is it for us to keep in mind when it comes to input costs for pork producers right now?
Yeah, it's more and more critical as we look at what are at least extremely tight margins, if certainly not red margins here, that we're going to see for a period of time. I think it gets harder for folks to talk about doing risk management in this kind of situation, but sometimes taking the strategy of I want to minimize losses in this kind of market environment might be beneficial to producers longer term. So just because it might be a situation where we can't really even break even, it doesn't mean it isn't a good time to think about some risk management in these kinds of markets, at least for a portion of what's being produced. And when you look at the feed side, we're not done in terms of getting a crop in the bin yet, and July and August are going to matter a lot to us. We'll have to see where markets go, but it might be a good opportunity to lock in some lower feed costs. As we know, hog and cattle prices both are likely going to be lower as we look ahead.
The other report this week, Scott, Restaurant Performance Index. As we take a look at those numbers, what jumps out at you, and why are we watching this from a livestock producer perspective?
Well, I think when we look at what I kind of call the three legs to the stool, and that's domestic demand, international demand, and supply, we know supply and international demand both are not so helpful from a price standpoint. It's really, we got to look hard at what's going on the domestic demand side, and that Restaurant Performance Index for May, that overall index came in at 101.2, so actually still showing expansion, although down slightly from where we were in April. If I was looking at anything out of that report, customer traffic, which makes up a portion of that current situation index, came in again at 98.3 for May, so lower customer traffic numbers. I hope that doesn't bode for what happens going forward. Now, you look at the expectations component of that index, folks are still optimistic as it came in at 101.7 here in the May report. So still some pretty good expectations, but we really need domestic demand to hang with us as we have so much of this other uncertainty on the international demand side, as well as now large domestic supplies coming to the marketplace.
Do we need to start making a plea, get out and grill, buy your pork, buy your beef, and feed your families?
I think we're going to have to do everything we can to move some tonnage of those products now. But again, if demand stays really strong, I think we can perhaps mute a little bit of what the negative effects is. So I don't want to be too doom and gloom today, yet I know the pressure is for lower prices as we look ahead, and everyone needs to really look at how their operation can fare under those lower prices and do whatever they can to really hunker down and keep costs under control in what's going to be a tough financial environment for likely several months as we look ahead.
The other big news this week, Scott, the Senate passed its version of the Farm Bill really in an overwhelmingly bipartisan support as both that bill and the House bill go into conference. Could we potentially see a lot more lobbying for more of those nuggets that are found in that Senate version to make a bill that's going to make it to the president's desk before the current Farm Bill expires?
Yeah, I think there's still a lot of uncertainty about where we go from here. I think when you look at both House and Senate Ag Committee chairmen, they are both working, I think, to get conference started as soon as possible. I think we're going to see certainly some discussion related to SNAP provisions as those differ the most between the House and Senate versions. When I look at much of the Title I between the two, yeah, there are some differences between the Senate and House versions, but maybe some of that's a little easier to reconcile. I still think things like FMD Bank are important to the livestock industry. I guess overall, I say from a livestock perspective, I don't see much of what we did in either the House or Senate version affecting feed costs tremendously from where we've been under the 2014 Farm Bill.
Really, that's about it for this week. Next week will likely be a slow week, just the jobs report and that 4th of July holiday. So what are we watching for next week?
Yeah, so I think we're going to end up with a pretty light run next week when it's all said and done, and likely it might be the lightest run we have of the year when we think about that July 4th holiday coming midweek. But in terms of other reports, there's not going to be a lot of new information available to us as we look at the July 4th week.
Scott, you'll have to bring your own fireworks next week.
I was going to say the Hogs and Pigs report sure gave us some fireworks this week, and we'll figure out what happens next week.
All right, Scott, you have a great weekend. We will talk to you next Friday.
That sounds great.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. Have a safe, happy 4th of July. Grill some meat, pork ribs, beef, burgers, all of it, and help support local domestic demand here. I'm Megan Grebner. I'm Brownfield.